Alrighty, what is up, traders? This is going to be the June recap. We're going to do it a little bit differently. I did post on Twitter that we'll do a lot of Q&A more so than trade recap, but we will go over trades, a couple of them. And the reason for being that is that this month I just feel like was a big redo of May here. Very similar, different but similar in the sense that I really wasn't making much money. I mean, yeah, I had a great week in May, but then just lose it all in week 3, and then really majority of my month came. I mean, really like one of the last days of the month, due to actually a very similar setup to that same that happened in June. Pretty much again, one of the last days of the month just came in and pretty much made actually more than my month because after borrow fees and previous losses and losing weeks. I actually made less on the month than I actually made on the 28th. So, in hindsight, it sounds silly, but you could say I just should have just traded the 28th and never traded any other day. But that's not realistic. But anyways, we're going to go over the few trades that I think were important. Most of them, again, were pretty just unfortunate, and I'm not unfortunate, but just uneventful trades. I hate to say that being such a great month at the end of it all, but I mean, so many trades were just, you see my win rate here. Setups just aren't working. There's just a bunch of red day setups that just are just kind of, turn out to be duds. I don't really have a reason or why for you. It's the market. It's tougher. And yeah, it is what it is. So we'll go over the trades that I think were the most influential, and the ones that were most, pinnacle or critical to this month being the way they were. And then we'll go over questions. I actually got a lot more questions than I expected, and we'll try to get through as many as I can. And ones that are most applicable for this month or just in general learning for everybody. So let's get right to it. So I'm sure you're all wondering what is this big, huge win? I know some questions were asking, what is this big win? This big win was on LYT here. LYT is I talked about this fairly briefly in May's recap with CLEU. Slightly similar setup, but slightly different. But LYT is, an IPO China pump. If you haven't heard people talk about this setup before, again, I'm not an expert. I've learned from many other people doing this. One of which is, Laptop Legend. I gave him a shout out in last YouTube video in May. He killed this one, and again, it's an IPO China pump, and I'll briefly go over it again. Typically these companies have a much lower IPO price, and they open up much higher, and then they actually run. Similar to like TNO, and I actually swung. I talked about that, and I just got bought in some shares and took a pretty gnarly loss. I believe it was like 30-40 grand because I just got short and swung, and then I got bought in near the top, and then it actually dumped. So similar to LYT, I didn't swing. I learned my lesson, and then it dumped. And so when it dumped, the indicators and the key things to look for, I always say, and I definitely mentioned in last month's video, is volume. You need to have volume. You need to see volume come in because all the days prior to the dump, look how much little volume there's. You can't see anything. And then on this day, there was tons of it. Multiple 3, 4, 600 share candles, plenty of 200, 100 share candles. And when you see this volume come in, that to me was the green light. And did I bet way bigger than I usually do? Yes. Reason being is because I've had enough experience, right? I've seen TNO and I've seen CLEU. I've seen JCSE, which I actually will talk about because I took a loss on this one. So I've seen them enough times to know if and when they're going to work. And this was just one of the ones where it's like, I've waited. I didn't get squeezed swinging it. I've been patient. I have plenty of capital dollars-wise and mental capital to size up on a setup that I've seen happen dozens of times. And I just went for it. Now, does that mean I had no risk management? No. If it started perking up over 35 and 40, then absolutely I would have taken a much bigger loss. But it was a loss I was willing to take. If you've seen a ton of my videos before, not even on this setup, but just in setups in general, you've heard me talk about like sometimes if a setup becomes so ideal, like I much rather take a big loss on an ideal setup than take 1,000 losses on a much smaller non-ideal setups, right? I much rather put all of my mental capital for the month into one big play, and if I lose 30, 40 grand, then so be it. I'll take that loss. I'll take that every day. And that's kind of why I was okay with losing on TNON. That's okay why I was losing. Actually, I lost a little bit over 10 grand on CSE. And so that's pretty much that. I'll go over the trades here. So here are the actual entries and exits. So again, you see me entering right when the volume comes in. You see me starting getting short, and you can't see it in the chart. But during this sideways period where there's like less volume here, you actually can see it in the level 2, like bids and asks just stacking. Like you can clearly see like no transactions are going through on the time and sales, but the liquidity is like adding up in the level 2. And so when I saw that, that's why you do see like these ads in the middle here. And then again, more volume. That 600,000 share candle came in, added some more. Finally, once I was full size, I actually realized I was a little too big. I had a little bit over 10K shares at my max size. So I did actually downsize like a tenth of my position because I was big. I was big enough I was as big as I wanted to be. But I also thought to myself, like, if this thing does give me some chop or does bounce back, I'm not gonna like having that little extra size that I did put on. So I did cover that there. But again, held 90% of my size on and covered that all down when I thought selling was slowing down, and also close to around the IPO price. I believe the IPO price was in the 4s or the 5s. So when we got to like the 7s and 6s, I was like, you know what, I don't need to be greedy. I'm going to take it there, and that's what ended up happening. So, ended up being my new biggest win of $176,000 in just one particular trade with Cobra. I did make another 40,000 or so with Guardian. So both those added up together. And again, the entries were pretty much the same in both brokers. That's why you only see one chart. I mean, I have Cobra here, but I have another one named Guardian. Exact same candles and exits and entries. So that's that there. And then if we move forward, I mean, on the same day actually was JCSE and KZR. So we'll go over JCSE because that's just kind of the same realm. The same setup pretty much, and actually JCSE did do the same setup, but I missed this day. I missed this dump, this IPO price. Again, the IPO price I believe is like $4. They opened it up near 20, traded it for a little bit, and then dumped it. I totally missed this day. I thought they were going to do it again on this day, and I actually ended up having to take a loss because they didn't do it, and for good reason. I wasn't as sized in as I was in LYT because it just didn't have as good a volume, right? Like, look at the comparison, right? Multiple 100,000 share candles versus something like JCSE when it just only has 80,000, right? It wasn't enough volume to give it a shot, but it just wasn't enough to stay down. And unfortunately, that's the kind of the risk you have to take. Like I when we were down here, I thought it was gonna work, and then it bounced back. And at that point, I kind of knew we were done, but I was kind of getting stubborn, and I wanted to give it a little more time. So I did end up covering, into dips along these last 2 days, but ultimately was all out by the 28th. I actually have my entries here. Or not my entries, my exits. For some reason, I forgot to take a picture of my entries, but I ended up having like a mid 11s average. If we go back to here, like mid 11s here. So in this area, got some in these higher areas, but I did have some lower ads below 11. So 1140s was about my average. Again, was up nicely at 7, like was up probably 40-50K. But ultimately, by the time I was all covered, I lost about like 12K between two brokers. So yeah, and that's just a good lesson of like, if the volume doesn't, it's not so much how much volume is dumping, particularly right here. I mean, yeah, it's important, but you want the volume to continue. And the fact that we really dried up here, I mean, hence why the bounce kind of came back. Whereas if you look at like LYT, I mean, all day the volume stayed pretty damn consistent, or at least, coming in. There was no one candle where volume just stops. And so I did lose that 13 grand on that trade over these 3 days. And then KZR, though, was actually a great gap and crap setup. Now, gap and craps are not a particular setup I like trading, but it was one that actually got on my radar because I was giving a webinar in the breakouts and breakdowns chat room, and one of the students had asked me about it. And I looked it up, and I said, it's gapping up on news. It's not really a setup I like to trade. I'm not really one to short first screen days on news. The only exception I give to that is if there's an ATM, right? Is if there is dilution. And I said, okay, since we're doing the webinar, let's just check if there is dilution. And lucky enough, there actually was dilution. So it's like I would have never even looked had I not given a webinar. So that's kind of funny. Where teaching actually helped me make money. And so I looked at the filings. There was dilution. There was an ATM. The news wasn't even that great. I mean, it was good trial, like positive trial news, but it was like the sample size was like 17 patients. And I'm no expert on FDA trials, but like if you're gonna have a decent sample size for a drug, 17 people is not it. So I forget how much they had in their ATM, but I believe it was up to 100 million. at least a few million shares at this price, up in 10, 11 bucks, $9. And if you go to my entries, I mean, I pretty much shorted pretty much out the open. If we go here, took a starter pre-market, but right out the open when it had that selling volume come in, and it really just was, I mean, not even a chance of a morning spike. I mean, from the very beginning, just selling. That's pretty much when I added full size. Was pretty confident. I've seen what price action looks like before when an ATM is actually like happening. You know, there's no way to prove that the ATM is being sold or is selling, but when you see enough of it, you have a pretty good gauge that it's happening. And so a part of you just has to trust it. And again, I've seen it so many times, so I did. Unfortunately, the one mistake I think I will say I made was that I did cover too much size too early in this 10 consolidation range. This is where I did get kind of antsy, and I did think to myself, like, if the ATM is really going to start working or was working, it should be a lot weaker. It shouldn't be trading around this $10 level like this long. Unfortunately, I was wrong. It actually did end up selling lower, and I did get a couple more covers down much lower, but unfortunately, I covered pretty much like well over half my size putting these 3 candles. So by the time I had this left, it just wasn't the size I really wanted. I would have much rather only have covered like one candle here, one partial fill, and then covered these 2 much around here, if not lower. Because I do remember thinking to myself, this should see probably mid-8s at the best. Unfortunately, I only made about 1 cover, sub 9. So it is what it is. Not the end of the world. I did make 10K, which kind of essentially crossed out the JCSE loss for the most part. So end of the day, you know, 220 grand, which is pretty much my LYT profit. My biggest gain though, or my biggest loss though, was this $9,700 loss, which was actually on the 22nd. This was because of, what was it, VYGVF, just another one. I talked to, it's so funny again how similar this month is to May, in the sense that I also did sell some crypto longs that I had. INTV being one of them. Again, if you haven't seen last month's recap, go watch that, talk about that. But this one is unfortunately a very similar situation where I had a position on it and I kind of just forgot about it until, unfortunately, the whole crypto market's selling off and got brought to my attention that some of these long-term plays I put on, and it just got crushed. Right? They had a. It was only until the event happened that they had money with 3 Arrows Capital. 3 Arrows Capital was a hedge fund that absolutely blew up their crypto investments. Fortunately, Voyager had some money, or had too much money with them, hence why they're down literally below $1. So I sold this month for again, whatever it was, 90% loss. You know, it's only 10 grand, so it's not a big deal for me in terms of proportions wise. But again, it's something I'm still not too happy of, because it's like I put a long position on to be willing to sell at 0, but not watching it until then. I should have been keeping an eye on it. So I talk about this in last recaps with INTV, but again, this is another one I had that I just decided to get rid of. And that's pretty much that, guys. You know, very similar, very uneventful. Low win rate is very low. And like I said, if I didn't have this day, I'd be red in the month. I'd have another red month just after my first red month in like 5 years on April. I mean, I had a video that talked about that as well, and why I got to this point from having such a terrible red week that week. So it is what it is. I'm super stoked to have nailed the LYT and be aggressive on it. And I'm sure there's a lot of questions that I got on it. So if there's any points I missed out on that trade, we'll go over them as the questions roll in. But what I will say before we move into the questions, the one thing I am pretty stoked about is the fact that I didn't take any big losses this month, and I didn't break any rules. There's a very old video I have going over all my trading rules. I'll link it in this video somewhere. But essentially, I didn't really break any of those. Any of my trades, yes, I took a lot more losses, but a lot of them were small. You know, having my average loss around 3K is pretty damn comfortable for me. That's really where I like to have it. Could I take bigger losses? Of course, I'm much more accepting of bigger losses, but as a general spectrum across the month, I really can take a 3K loss on average and not have it affect me, not cause FOMO trading, not cause revenge trading. That's kind of the sweet spot of a loss that I can take and not even blink and immediately forget about it, you know, a couple hours later. And so that's something that I was really, really happy about. And also, too, the biggest loss, like I said, is at least in one trade was 9,700. Yeah, I did lose a little bit more on JCSE, like I said, but that was over 2 trades. And so losing that little, I'm actually pretty stoked about, because if you look at previous months, you know, May I lost 42, April I lost 62, March I lost 21. In February and January was actually pretty good. They were actually one of the better months of the year in terms of discipline and staying safe. But again, the last 3 months or so, I've been taking losses that were just way too big that I wasn't really comfortable with for the most part. Some I were comfortable with, some I wasn't. But it's really good to see that this month I just avoided that. Now again, like I said, if I actually stopped out on LYT, that would have been a bigger loss. But again, that's a loss I'm willing to take. That was the bigger loss that I would have been okay taking versus some of the bigger losses, like I said, I wasn't okay taking. Like BGXX, I talked about that in this month. VERU, I talked about in April. So go watch those videos so you'll understand what I mean. But very happy that I for the most part, and for the large part of this month, really stayed under control, really controlled those losses. And so hopefully we'll continue to do that into July. So anyway, let's jump right into the questions here. I'll bring them up here. So if I actually end up liking your tweet, for those who, I guess I haven't liked any of these, but for the most part. So if I did like your tweet, your question has been answered, and I'll tweet that out. It's probably better if I tweet that out versus say it here, because people who are watching it this far in have to see this point to know that. So let's just jump right in. So Simon asks, to newer traders, do you recommend longing or over shorting? Why does shorting have a higher win rate though, and why is it that you are short focused? Main reason is you focus on short, and what do you think of the better age in shorting? So if you're a newer, the advice or the way I'm going to answer this question is not necessarily what I did, and I think that's because it's different for everyone. When I first started trading, I pretty much started shorting, or at least tinkered with shorting, pretty much right away. I mean, I did my first few trades, I think, were on the long side, but I didn't wait for like 4, 5, 6 months to then jump into shorting. I know some people do that, and if you do that, that's totally fine. But I pretty much wanted to kind of do both at the same time. I wanted to learn longing setups. I wanted to learn shorting setups. Now, granted, in the beginning, was I really learning any of that? No, I was kind of taking random trades here and there, like, oh, I think this stock will go down, so I'll short. Or, oh, I think the stock will go up, so I'll long. And it was very disorganized, and it took me, again, about a good 8 or 10 months to a year to really like find two setups that I liked, which one was long and one was short. But no, I didn't, reserve myself from shorting in the beginning. So when you say to newer traders, do you recommend longing or shorting? I think you need to know yourself and learn yourself as a trader and which one you're gravitated to. Because I know many traders who started doing longing and they went shorting. I knew a lot of traders who started doing shorting and they went longing, right? I think it's a matter of what you're gravitated towards and where your personality wants to play out in the markets. One thing I will say, though, is if you are shorting and you don't have discipline to cut your losses, that's an issue. And that is why I think a lot of people hold off on learning shorting, because they need to get your discipline and loss cutting down. Because if you don't, that's where the huge blow up losses can come from. Hence why when you say, why does shorting have a higher win rate? Shorting has a higher win rate, in my opinion, because we trade small cap stocks. These stocks are the garbage of the stock market. They are the worst companies, and that's not my opinion. It's just factual. These companies are startups. Some will succeed, but just the overwhelming stats of how the marketplace work, 80, 90% won't be here in 3 to 5 years. It's just the reality of it. Whether I'm a short seller who's betting on against these companies or not, they're just going to fail. And so if you're there to bet on that failure, it's going to happen whether you're there or not, like I said, and it happens. So the win rate in shorting is generally higher from what I've seen, but the risk reward is not as good, right? Longing, the win rate might be lower, but your risk reward is going to be much, much better, because you can have runners go, 100, 200, 300, 400% in your favor if you really want to hold them long enough, or if you nail them that long enough. Shorting, on the other hand, the most you could possibly make is 100% to the downside, right? The stock goes to zero, you make 100% from your position. So win rate is higher because, again, companies are crappy, but your risk reward is worse, especially if you can't get your losses, because you can lose more than 100%, like I said. So but why am I short focused? Again, my personality plays out that way in the markets, right? I'm just not as good as a long trader. None of my bigger wins are on the long side. I usually don't have as much patience on the long side, and I have, surprisingly, an insane amount more patience on the short side. And that's just my personality. That's just what I gravitate towards, and that it's as simple as that. I don't try to question it or figure out why I'm not a good long trader. I know a lot of traders want to be so good at both, and I just don't feel the need. I like making money on the long side when it's there, but when it's not, I just don't care. I'm not gonna sweat about it. The goal here for me is to be profitable. I don't really care if it's more shorting or more longing. Whatever my personality fits well best into the market, that's what I'm gonna trade. So Simon has a follow-up question. Do your most profitable bread and butter setups change during market conditions? How do you adjust setups this year to this market for them to work out? bread and butter setups change during the market conditions. Yes and no. I will say, like I said, the month was pretty uneventful because a lot of first red days, which were my bread and butter setups, just haven't been as ideal. Again, in many ways, I've certainly sized down from the bigger losses I've taken in previous months, so that even if there was a solid red day, like Revlon had a good solid red day in the month, and I just didn't really size out that big. I think I did it making like 9K on it. What was it? Like this day right here. So it was a good win for me, but it wasn't my typical first red day size. And I think just because I sized down in general. So in terms of market conditions, like I generally do size down, unless it's an absolute blow out the water A+ setup like LYT was for me. But other than that, I just kind of change my sizing. I might change the frequency or how picky I am to actually take the setup. But in terms of setups changing for me, not necessarily. I mean, the LYT China pump setups that have been coming around a lot have gotten really popular this year, and a lot of short traders have been wanting to like nail them because for obvious reasons, they're a setup that's working in this environment. The problem is it brings a lot of traders to make it very crowded, right? Like JCSE, even though it had less volume, it was crowded. There were a lot of shorts in this, and I heard a lot of stories of shorts that blew up, that just went way too big, went way too big, way too low, and when it bounces back on you, you got screwed. So it's a constant adaptation between not only the setup, but who else is trying to trade that setup. And a lot of people are trying to trade them right now for good reason. I don't blame anyone for trying to learn that setup, myself included. I'm certainly a latecomer to the setup, but it certainly changes that particular setup in terms of this particular one by how many people are trading it, how many people are trying to adapt to new things, because this market is tougher. This year is generally a much tougher year all around. So hopefully that answers your question. What made you choose LYT to short? What was coming in your scan? So I kind of went over that. Like I said, it's an IPO. It's one IPO that's way overvalued. Does that mean all IPOs are like this? No. It kind of has to be on your radar. I've kind of heard. I don't have a scanner for them. I'm unfortunately or fortunately, how you want to look at it, I'm pretty integrated in the trading community. I pretty much hear word of mouth very quickly on if there's a new China or IPO pump, and that's kind of how I find them. So. Another LYT question. How do you call this setup? Okay, we've talked about that. We've gone over that. Let's keep moving on. Do you choose specific routes for your trades? What is the reason and price execution quality? That's a good question. So the routes I particularly use, I have a Word doc here. Let me just pull this down here. We'll just go monthly recap. These are all things I wanted to go over. I do this so I can stay on track here. But so some routes I'll use for like OTCs, I'll use like SPDRXL. L at the end just means limit. You could do XDRM for market, but XDRXL is one. I know OTCXL is one for OTCs. Heat L is another route I'll use. For NASDAQs, I'll either use like Fan L or Lamp L. No really rhyme or reason for any of these. They're just ones I like. Particularly something like these will actually pay me Lamp L has no ECN fees for most stocks that you trade on NASDAQ. Fan L will actually pay you an ECN fees if you give or if you bring liquidity to the market. So if you're sitting on the bidder ask, you'll get paid an ECN fees versus if you take liquidity, you're going to end up paying them. So it does get more expensive. These routes, there's no really difference in why I use them besides the fact that some OTCs stocks do let you use them, some don't. So besides those three, at least five, these are really the main five I use. In terms of pricing, I mean, they're all, like I said, it's whether I want to take liquidity or give liquidity, what stocks will take what routes. That's pretty much the main reason why I'll do that. Other than that, there's not much else to that. How should new traders post-2020 approach what might be their first true summer market? Aside from trading less, is there any specific to stock selection that you recommend doing differently? Like I said, sizing down is huge. Again, if your win rate is low like mine, as a general perspective, especially if you're a newer trader, like if you're post-2020, you don't really know when to push it and when not to, and you're actually learning when not to, hence being the first, like you say, true summer market. Size down, like across the whole board. And I do that, and I did that having this loss, my average loss be lower and having most of these red days being pretty damn small. And I have the experience, like I said, to size up when I see something big. But if I was learning and I didn't know what my ideal setup was, or I didn't know when kind of like the stars and indicators align for me to really make big money on a big trade, you have to learn that first. And so sizing down is huge. right, being your stock selection being way more pickier is huge. That's incredibly important. Not all first red days are created equal. Not all breakouts are created equal. And in much choppier or more difficult markets, you kind of want to be picky and to make sure that the indicators you look for more in your favor than not, because typically if any less indicators are in your favor in a tougher market, the odds of you taking that loss, or the odds are more against you than for you, or in your favor. So hopefully that makes sense. I know I'm rambling a lot on these questions, but my brain just starts firing all the things I'm first thinking. So that's what I do. Be way more picky, making sure all the indicators are in your favor, and trading less size all around, because you just don't know, especially only 2 years in, really what your best setup is. I had a really good tweet or thread the other day about, how long it takes to actually learn what is an A+ setup for you. And like I said, it wasn't in that thread. If you go to my Twitter, it wasn't until like year 3 or year 4 in that I really started to push it and knew when the best trade setups popped up for me, that I really sized up. So yeah. Who are your greatest mentors when it comes to trading psychology, and how do you implement the things you've learned? So trading psychology, huge for me, was reading books. I know a lot of traders aren't into reading books. I know some who are into reading books, but for me, I was one of those traders who did like reading books. Any book by Brett Steenbarger, Dr. Brett Steenbarger, Barger, forgive me if I don't pronounce his last name right, but he has like 4 or 5 trading psychology books. They're all immensely helpful, mainly because he also like actually tells you how to implement them. Like, so you ask, how do you implement the things you've learned? He talks about it. He definitely talks about it, how to build habits or just implement those things you've learned. And from a way of how do you implement the things you learned, I mean, when I learn something new, I get excited. I'm like, oh my gosh, this is going to help me trade better. Like if that's not enough to get you motivated to implement it, I don't know how else to do that. If you've learned something new and then don't want to implement it, or just can't, like there's got to be some mental block there that I can't relate with, unfortunately. I mean, maybe you need to put sticky notes on your computer. Maybe you need to set an alarm on your phone or your watch to be like, this is where you need to do these things. But for me, when I learn something new that I know can benefit my trading, I mean, it's like automatic. I'm like, why wouldn't I implement this ASAP right now? So hopefully that answers your question. How do you plan to trade an oversetted gap down first ready setup? How do you decide how many bullets to use? The size in each bullet? How do you scale and build a position, manage your trade, average winner? Wow, there's a lot here. Geez. I mean, unfortunately, I don't think I could really answer this many questions in this short of a video. There's so much here. I think the best resource for this whole entire question here you have, or questions, is Trading Tickers by Tim Grattani. He goes over the overextended gap down setup very well, goes over the first red day very well. You actually see him manage his positions in real time. In terms of, I mean, I guess I can answer how many bullets I use. I don't really like giving a stock more than 2 or 3 tries. If I'm wrong 3 times in a row, that's pretty much for me to really want to call it quits. Size per bullet, I mean, it just depends on how aggressive I want to be. Scaling in is different. Sometimes it needs to be all in one shot, one kill. Sometimes I can build into a position. It really is just so case by case. And so, again, like I can't just answer this question in this video. You kind of have to watch numerous different setups, numerous different traders. So that's why I think DVDs are so helpful from traders who have posted live trades or recaps like mine. So I think that just comes with time. You just kind of have to gather each contextual or each setup in its own context and each trade in its own context, from whether it's from me, Tim Bertani, any other trader you're learning from or have watched. Like, you just kind of have to gather that data over numerous hours of screen time and watching other trades. So what happened on June 12th? June 12th was a holiday. I think you mean 22nd, which I did talk about with my crypto swing trade that just I forgot about. So hopefully that's what you asked about, and that we can just move on. How has screen time been a vital development or determinant for your trading, and how do you still play the same, do you still play the same patterns you played when you first started trading? Screen time is huge because it's essentially practice. I know you hear a lot of traders say screen time, but screen time is just practice. I mean, if trading was all done on books, like if trading was all done just by writing and reading, then book time would be the word we'd use, right? Screen time is just practice. How has screen time been a vital determinant? Because I'm just getting hours. I'm getting more hours than the average person's willing to put in. Simple as that. I mean, it's no different than an athlete wanting to be an Olympic athlete or an athlete wanting to go pro. Like, it's just the amount of time you're willing to put in and practice. It's really that. It comes down to that. Just that. And do you still play patterns that you played starting out? Yes. First ready is one of the first shorting setups I learned. Still play that. Shorting pumps, still do that. Clearly by LYT. Panic dip buys, still do that. They're not as frequent anymore, but they do still happen occasionally. I still do play that. So yeah, I definitely still play the same setups I learned. Just reminded myself, I actually forgot to like all these tweets or all these questions. Let me just go through them. So I went through them. We've gone through all these. Boom, boom, boom. And done. Okay, let's keep going back. Struggles you dealt with when you came to filling big size when you started sizing up. Lots of slippage on fills, slippage on stopping out, etc. Also, do you get health insurance being self-employed, and how do you pay? How much you pay money in taxes, saving tips? Wow, a few good questions here. So dealt with sizing up and getting filled. That comes with just trading more larger volume stocks. You know, when I had a smaller setup, or a smaller trading account, I should say, there were so many trades that I took that I would not take now, because, you know, if I only have to take 500, 1,000, 2,000 shares, you know, I could trade a lot of stocks and not have an effect on that stock and have slippage or not get filled. But if I want to trade taking 10,000, 20,000, 40,000 share positions, I need a bigger volume stock. And so there's a lot of trades now that I will not take, even though it might be a setup I recognize. I'm like, yep, you know what? If I took this trade, I probably would profit. But it's like, if I can only take 500 shares, you know, I don't mean to sound like money doesn't matter anymore, but it's like taking 500 shares and making $500 versus taking 50,000 shares and making $50,000. At some point, you have to value your time and your energy in terms of trading. And so there's a lot of trades I still take, or there's a lot of trades I see that I just don't take anymore, because it's like the volume isn't there. I physically can't fill. And so if you're taking a lot of slippage on a lot of trades, you either are too slow in stopping out, or you are just trading stocks with too big a size. I mean, you're moving the market. That's the best way I could say it, because lately when I traded the high volume stocks, I don't really deal with slippage nearly as much as I used to when I was sizing up. And maybe you're at that point where you're dealing with that. I would consider looking at maybe the same setups, but being a little more picky on how much volume you actually need to trade that setup with the size you want. How do you get health insurance being self-employed? I mean, there's multiple companies that will allow you to just buy health insurance as an individual. You got to find which one works best for you and your health plan. You know, I'm no health advisor by any means. How much do I pay? Quite a personal question. I mean, I think I pay $400 or $500. You know, it is a write-off for me, so I have no problem getting a better, more expensive health insurance. How much do you pay in taxes / saving tips? I mean, tax. This is always a tough question for anyone you ask, because it's like everyone's different with their tax accounting and everyone's situation is different. No one tax thing is alike. You know, in terms of paying taxes, you know, I pay 40-50%. I'm in the highest tax bracket. That's how much I pay, just based on, you know, the percentages of everything. Tax saving tips, I mean, you gotta have write-offs. You gotta be able to either have a corporation or have trader tax status. Those two allow you to have write-offs for your trading business. I'll leave that to you to do your own research and do that, because again, everyone's different, and I'm not gonna be able to give you your tax advisor. I'm not even close to understanding all the tax loopholes, and not even loopholes, just how taxes work. They're very complex. That's why there's whole tax accountants for that. So I recommend going find with someone that understands that better than you do, certainly better than I do, and having them help you that way, because I'm not it. Did you really grow your account from 6K? Absolutely. I know there's a lot of scams out here that would say you lie. And in fact, I'll actually do this. Let me go to E-Trade real quick. I'll actually pull this up, because E-Trade was my first account. Let me just sign in here. I'm just gonna pull it away because I'm obviously my username and password here. Log in. This might take a minute, guys, so I don't want to take too long here. But I'm pretty sure if I go to my accounts, or like my statements, documents, brokerage statements. Let's go here. Let's just prove it for any doubters that are out there. It's gonna be good. July, let's go to all the way 2016, because that's when I started trading. Let's go to this, boom, apply. I'm just going to my brokerage statement. It's going to go all the way back here. My first brokerage statement was July 2016. Oh, it's downloading now. Okay. Alrighty. Let's see. Let's scroll down. Let's go to the bottom. I think that's where they put the... Here we go, right here. So, boom, 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 boom. Deposit. So on July 5th, I fully funded my E-Trade account for $6,000. Boom, right there. So yeah, I did indeed start with a $6,000 account. Do you break any personal rules from LYT? No, like I said, I did go much bigger size than normal, but I also was willing to take that size and willing to take that loss had it not worked. So yes, I did not break any personal rules. Or no, I did not break any personal rules. My main two questions here: what broker did you use when you first started trading? And oh wait, whoops, I'm forgetting to like all these tweets. I'm getting about it. There we go. Too many questions here. What broker did you use when you first started trading a platform? To answer that question, I actually started with E-Trade. Like I said, we just looked at my E-Trade account, and then I also used StockTrade from the very beginning. I mean, they had like a 4th of July sale, and I remember buying them on a discount, and I literally have had them ever since. So that's literally the two first platform and brokers that I had and I used. So what are your thoughts on the second red days, and how do you trade them? What are your thoughts of strategy on them? Are you looking for morning trade or wait for the afternoon? So if off the bat, most of my profits are in the morning. So waiting for the afternoon is not really something I do. Sometimes I do, but again, 90% of my profits come from the morning. Second red days do happen. I would treat them very similar to first red days in that I do want to respect red-green at some level. Or if they're a more choppier stock, I'm willing to risk maybe a previous resistance from the first red day. It's such a case-by-case thing. Is the stock gapping up? Is it gapping down? Because if a second red day gaps down too big, then I definitely think it's going to be too sold off in most cases, and I really don't want to take it. Unless it spikes to red-green, like I almost treat a second red day like an overextended gap down. So again, it's kind of similar to one of the questions we got below, where it's just there's too many case-by-case situations, and you kind of have to just learn as you go. Because there is no second red day setup, but in many ways I treat them as the same as the first red day, given the context of each individual trade you're taking, whether it's gapping up too much, gapping down too much, is it choppy, is it a smooth runner, like I said, etc. So Tim asked a question: how does it feel to have your entire month's profits come from one trade only? Will it make you trade less or be pickier in July? Not necessarily. I mean, how does it feel? I mean, it feels good. It feels good to know that I can size up on a trade and make 1 month's full of profits, or well more than an average person's salary. That's kind of insane when you think about it that way. So it feels great that I've built that skill set to do that. In terms of will I trade less or be pickier in July, I don't think so. I don't like the mindset or the habit of letting one trade dictate your future decisions, right? And in many ways, I actually will start a whole new clean slate every month. Some people want to do it per day. Some people like doing it per week. For me, it's per month. I generally, when a new month starts, the previous month is pretty much irrelevant. I just like to go from there. And so the fact that I made a huge trade at the beginning of or the end of June doesn't really change how I want to trade going into July. I'm still gonna be sized down because this market is still tough, but I don't think I'm gonna really change, how I trade because of 1 month. Because it's easy to say, oh, I'm going to be pickier or I'm going to protect my profits when I had a huge win. But if you do that, then you're opening the door to trading differently if you've taken a huge loss. That's where revenge trading comes in. That's where FOMO trading comes in. That's where, being on tilt or being super biased or being too emotional comes in. So either way, I don't like, letting that affect me. And then adding on is, what's your biggest trade day and what percent gains do you capture? So biggest trade trading day was this day, 220 grand. I think my previous biggest day before this was like 150, 160. And then what percent gains do you capture? I think my average gain or capture across my career is like 7, 8, 9%, maybe 10% at the max. I mean, that's pretty much my average. I'm not, most of my gains are not the massive 50, 60, 70% wins. It's on average, it's, 7, 8, 9. So I like that. On deliberate ticker pumps, please. Not a question. Let's move on. On your LYT trade, what was the factor that encouraged you to size up, identifying A+ setups? The volume was doing 35 consolidation percentages. Please go through your thought process. We did that. We did do that in the beginning, so that'll be answered for you. Do you have a financial advisor, or do you track all your budgets and spending yourself? I do have both. I have an own financial advisor, but besides that, I track all my anything I spend on. I have an obsession with tracking how much I make, how much I spend. I like personal finance in general beyond trading, so I generally do that and track things. So, what questions do you ask yourself before deciding to go big size on a certain plays? That's a good question. That kind of makes me think into the psychology of, right, how do I go into sizing up on A+ setups? One particular thing that makes me think with LYT is either it does or it doesn't work. And what I mean by that is, let's refer to the bias that a lot of people have when they play blackjack, or not blackjack, when they play roulette. So if you go to a roulette table at the casino, you can bet on one number of 1 to 35, but you can bet on red or black, right? If you want to play it simply, you want like 55-50 odds. Not 50-50 because there's the green, there's the double zeros, but for the most part, it's like 49%, right? Either it's gonna hit red or it's gonna hit black, right? And so if you want to play 50-50 odds, you bet red or black. Now, a lot of times at these tables, you'll see black hit 6, 7, 8 times in a row. And most people's first response is that, oh my gosh, it's going to have to hit red eventually. Like, let me just keep betting against the consensus, which is black. Because they think the odds of hitting red again are higher. The reality is the chances of it hitting red on the next roll is 50%. The next roll doesn't care about how many times it's hit black before. Each roll is 50%. And so the reason why I bring that up is like, either it's gonna work or it's not. Either the setup is gonna be red or it's gonna be black. There is no, oh, it's happened so many times, so like the odds have to be better. When you deal with such an A+ setup, at least the way I view it in my own mind, when all the indicators come align, there is no, like the first red day setup happens, for me, I trade it about 60% of the time, win rate. So if I take 100 first red day setups, I'm gonna win on about 60-65% of them. That is across 100 first red days that are not all ideal. Some are going to be really good, some are going to be really bad, some are going to be really choppy but end up working out, some are going to look really good but end up actually coming back and taking a loss. There's too many variables across that great of a sample size to say these are the ones I'm going to size up on and these ones I'm not. The reason why I think a lot of traders, at least what I personally call A+ setups and categorize them a little bit differently, is because yes, they may be first red day setups, but they've got so many things going for them that 60% win rate, if you want to call it that, almost doesn't apply. Like, yes, it does. A win rate still does apply. You don't want to think, oh, I can't lose. Like, of course, there is still odds at play whether you're going to win or lose. But when there's a setup that is so good and everything is in your favor, for me, it's like, this is so good. If they want to pull a black swan event and have by the, whatever, call it 5%, 1% odds that this good of a setup with this many indicators wants to stop me out, then go for it. Like, I will take that trade every single time. And so for me, it kind of enters that moment of like, this is so good, it's either going to work or it's not. There's no in between. And if it doesn't work, I will take that loss every single time because of how good it does work when it actually is in my favor. So LYT, I think that's why I generally size up a ton and was willing to take that loss, because I'm just seeing everything play out in real time. And I'm like, it's either it's red or it's black. There's no, oh, it might work, oh, it might not. It's like, if it's this ideal and it's looking this good, it either does or it doesn't. It's do or die here. And I say that very lightly because I don't mean to say do or die as in like go all in or not. Like, by no means was I all in on LYT. I never like going all in. I always like giving myself wiggle room no matter how aggressive I like to be. Some people would disagree with that, and some people like to be aggressive, and those traders will make a lot of money, but they also will lose a lot of money. So I'm kind of in between, where I do like betting pretty damn aggressively when it comes, but not just outrageously throwing out the window that you could be wrong. So hopefully that makes sense. I know that was a long explanation, but that's kind of how I view it. Jackson asks, didn't this happen last month too? Yes, it did. That's, I kind of went over that. May was very, very similar in many, many aspects. And so that's kind of we're doing the Q&A because I feel like I'm doing the review twice. Bryce says, why do you learn? I saw this tweet earlier, but why do you learn to be so handsome? Ask my mom. It's her fault. Are you using fibs? No, I do not use fibs. The only indicator I use is VWAP. David asks, night sizing into China scammer stock picks. So yeah, he knows about it. What are the steps you're looking for in this market besides waiting for the picks? First red days, like I said, are still happening. I am sized down lower on those, but they do still happen. But like I also briefly mentioned, these picks are pretty popular among short sellers in this market. A lot of them want to be a part of it. A lot of them are hard to catch. I mean, I've certainly, you're only seeing the ones I've caught. Yes, I made money on TNON and CLEU and now LYT. But there's, probably dozens that I've watched and I've missed. So, this is a popular setup, but it certainly isn't an easy one. And there's many I have missed along the way learning these setups. And there's many I've taken losses on, like BGXX I took a loss on because I just was one of those people who wanted to be in and not miss it like so many short sellers do with this setup. And unfortunately, it led to a huge loss. And I talked about that in last month's recap. So if you take your biggest win, if you take out your biggest win, how would you still feel about the month? Great, this is a good question. Was it good or bad? If anything possible, explain why. Thanks. So if I didn't have this big month and I was red on the month due to borrows, I wouldn't feel that bad. I would feel I would feel not exhausted. I would feel a little bit lame or disappointed because my win rate is so much lower and because it was such a battle to just come out of, like, after all the fees and the expense of doing business, that I just couldn't pull out a green month. But at the same time, in the fact that I, again, didn't have any huge losses, I didn't break any big rules, the reality is I traded the best I could. It's just the market I was given wasn't necessarily as in my favor as it was. And again, this is saying without this red or this huge green day. So it's this kind of red month is way different than April, this red month, because in this red month I broke a ton of rules. I was way too aggressive. I took way too big of losses, hence why I lost 85 grand in 1 week, which is way more than I've lost in previous weeks before. That's the kind of red month that would really get to me and bug me because I broke rules, because I was undisciplined, and because I really didn't, that's not how I got here as a trader. Here, I may have been red without this day, but how I traded is how I got here. I stayed safe. I took appropriate losses. I sized in correctly when I needed to. I followed all my trade plans. I didn't break any rules. So it wouldn't feel great because I'm not green, but at the same time, I wouldn't feel bad about it because, I did what I could. I traded the best I could. I followed my plan. I followed my trades, like I said. And sometimes that's all you can do. That's the best you can do. So maybe you've done this in the past, but going over what you consider A+ setups, the setups that you're willing to size up on with confidence, and how you identify those trades. So I feel like we've gone over this, but it's a little bit worded differently in a different perspective, and so I do like that. In general, across all setups, A+ setups are going to be different for everybody. Some people might not understand how LYT works, and if you don't, that is okay. You do, and this is a psychological thing that I've seen, particularly with this month around LYT, because I'm not the only one who made money on this trade. People are now like obsessed with this setup. Like, how do I, make money on this setup? Because you see other traders killing it. But back to that personality thing, it might not be for you. And if it's not, that's okay. Like, there are so many other traders that are killing it on other setups that I have no idea about. But it's their bread and butter. They understand it so well, and they will trade it every single time it shows up for the rest of their life, or for their trading career. But I have no idea about it. So I think it comes down to personality. It comes down to what you find, what you are personally attracted to in the marketplace. That could be breakouts, that could be short setups, that could be dip buys, that could be reverse mergers. Who the hell, some fundamental catalyst. Who the hell knows? But regardless what setup it is, I think across all A+ setups, it is the setup itself showing up, whether it's a reverse red day, dip buy, breakout, etc., like I said, but it's got everything it possibly can in its favor, right? And what I mean by that is it's more ideal than normal. So you might get an average, I actually go over this. I will link in this video my very first YouTube video, and I actually talk about this, where like not all setups are created equal, and I kind of show a very brief example of like what makes a breakout from being a regular breakout into being like an A++ breakout, or what makes an OTC pump and dump from a regular pump and dump into an A++ pump and dump. So if you can apply, and so go watch the video and watch that, and if you can apply that thesis of what I say about those setups into any ideal setup, or into any setup to make it ideal, what constitute it to end up being an A+ setup, that's what turns, that's what I consider a setup to be A+. It's like when everything is aligned, like every indicator, everything you look for in a setup that makes it that setup is in your favor to work. Kind of that goes back along with where it's do or die, or it will or it won't work. It's like if everything's in my favor, you gotta trust it, and I think you gotta trust it with size. Again, this has been years in the making. Like I said, I really didn't get to this point sizing in or what I consider to be A+ setups until really late year 3, year 4, year 5. Even me in year 6 is really when I've pushed A+ setups farther than I have before. And so, hopefully that makes sense. Again, I will link a few videos. I got my trading rules, my first YouTube video where I talk about ideal setups, and I'll link those in the description below and in the video here so you can see them. But other than that, guys, I mean, I've gone through all these questions that are here. You guys had a lot of good questions, and going in July, so far it is the 6th or the 5th today. It's only been 2 days, no trades yet, so we'll see how it goes. A couple of little bit of borrow fees here, but we'll go over that once the month is over. We'll see how it turns out. But other than that, guys, thanks so much, and I'll see you guys next time. See ya.